Hi, I'm Jaideep Marathe. I'm the director of Raya Wealth Private Limited. We are a AMFI registered mutual fund distributor and a SEBI registered authorized person. We have presence in Pune, Mumbai, Siliguri, and Marathwada region. We welcome you all on this webinar presentation on market update and India's growth story, January 2026. Through this presentation, what we have tried to do is to give actual facts, statements, data, and whatever content we come across through our research. Before we begin, we have to read this disclaimer, which goes as follows. The information provided herein is for general informational purposes only and does not constitute investment advice, financial advice, trading advice, or any form of recommendation. Nothing in this content should be interpreted as an offer, solicitation, or endorsement to buy, sell, or hold any financial instruments or security. You should conduct your own independent research and consult a qualified financial advisor before making any investment decision. Part 1. So we have done this presentation in 3-4 parts, and part 1 obviously talks about the elephant in the room, President Trump, and the primary reason for the recent volatility. Right here, what we have tried to do is restrict this discussion in part 1 to President Trump, India relations, and the India-US trade deal. January 2025, President Trump is sworn in for the second time, considered to be the mother of all the comebacks in the US presidential history. And as you can see from this official portrait, so every president in the United States has to have an official portrait. This is the one that he chose for his 47th US presidency. And you can see that he's going to be aggressive, he's going to go for the kill. Fortunately for us, as things turned out, February 2025, Prime Minister Modi was one of the first leaders who visited United States and had a meeting with the Trump administration, including President Trump. And these meetings, as published all over the news, were considered to be very productive. India was supposed to have a very special relationship with the United States. April 2025, what the Trump administration called as the Liberation Day, every country in the world was put under tariffs, including India. The good part was that the meetings that had happened in the months prior to that, it was considered, or it was that was the narrative at that point in time, that India will be one of the first countries to end up signing a deal with the United States, right? If not the first. So one of the first countries. However, we all know what happened. The barbaric terrorist attack in Pahalgam, followed by Operation Sindoor, and at the end of it, India struck Pakistani air bases. There was a plea for ceasefire. Ceasefire was announced, but President Trump claimed that it was his intervention that actually ended the war. Whereas Indian establishment, our government, has since then maintained that it was the Pakistanis who initiated the call for the ceasefire. Now, this or something else that triggered during Operation Sindoor, there are a lot of theories about that. It made a 180-degree turn in the India-US relationship, right? And we all know what has happened. The specific sore point in the India-US relationship turned out to be India's purchase of Russian oil. Now, we all know all major developed countries, be it Europe, be it US, and many others, including say China, have a consistent trade relationship with the US. They buy all sorts of things, but India was singled out for our purchase of Russian oil, right? And we could see the attacks from the Trump administration right from the month of June till date, right? They're still going on. There are still comments, there are still statements that are made against India for what we do with for the trade relationship that we have with the Russians. However, one good sign that we saw very recently in Davos, where the World Economic Forum is meeting, was one of India's reporters could manage to get a comment from President Trump, where he very specifically said that I have a great respect for your Prime Minister. He's a fantastic man and a friend of mine. We're going to have a good deal. So one thing that we have understood in all these things that have played out over the last 1 year between the India-US relationship is that there is uncertainty and you cannot predict the future. We cannot predict how things will play out, be it geopolitics, be it economy, be it how the stock market performance, how gold will perform, or any other asset class or any specific security. So we have to move beyond that. We have to move beyond trying to predict and trying to time the markets, right? What President Trump has also shown is that you might be an enemy or you might be a friend of the United States, but he's going to go hard on you. He's going to go for the kill. If he wants something, he's going to ask for it or he's going to take it. We could see that, and these are, by the way, the images that he himself has put, right? So he has claimed that he is now the acting president of Venezuela. We know what he did to the president and his wife. The recent volatility that has happened is primarily because of the US demand to gain control over Greenland. Now, Greenland belongs to Denmark. Denmark is part of Europe and the NATO and a long-term ally of the United States. So it doesn't matter if you are an enemy or a friend. However, what seems to be working is if you show the spine, if you show that you won't get bullied and you have the ability to strike back with whatever leverage you have, you probably end up getting his respect, right? Then that's exactly what the Chinese have done. Um, President Trump's entire narrative before getting elected, during the election campaign, and after the election was against China, right? However, today they have a very strong functional business relationship. Why? Because when President Trump and his administration went after the Chinese said that we'll stop the export of rare earths, all the goods that are manufactured in China and then sold in US, and that shook their administration, that shook their business. Because if you don't get, especially these rare earths, right, you can't produce weapons, you can't produce semiconductors, it's needed in all critical industries, and your industry shuts down. So they had to back off. And you can clearly see that October of 2025, in fact, all of this started in the month of April. In May, they sort of did a ceasefire between this trade escalation that was going on. This was after the Chinese struck back. And then in the month of October, they formally came together and announced that the Trump administration is going to lower the tariffs, and China is going to start sending back the rare earths to the US, right? So in summary, what we would like to conclude in this first part is that uncertainty is going to persist irrespective of a deal. And this is going to be throughout the course of his presidency. It's not going to change. You have a deal, you don't have a deal, its uncertainty is going to be there. So we just have to live with that. Countries who have stood their ground seem to be getting his respect eventually, right? So you can put that in context. This is what we feel. And what we need to do now is focus on all the other positives that are happening domestically in India and in the international or the global space. Factors that are playing out, which could eventually, right, not immediately, but maybe in the short term, medium term, or the long term, right, end up favoring India, right? So now we come to part 2, India and the trade deals, right? So this talks about trade deals that we have done with countries other than the United States. This slide very specifically states, this slide is from the World Trade Organization. What it shows here is that America as a continent contributes 14% of the imports, right? So what we could basically conclude is that 85%, roughly 85, maybe 83%, some studies say that 83% of the world trade is outside of the United States. Now that's where the world has now started to focus, right? Because of the volatility and the unpredictable nature of this administration, right? You don't know what is going to happen tomorrow. So that is where the focus is. Now, our government has been negotiating with a lot of countries, especially after COVID, and we clearly saw that the China plus one factor is starting to play out. What does China plus one mean? Is countries have been dependent on China for, especially with respect to merchandise trade and all the manufacturing, because China has a huge scale in manufacturing. They produce and export it to the entire world. But after COVID and especially after the Ukraine-Russia war, with China clearly siding with the Russians, some of the developed nations in Europe, or most of the developed nations in Europe, North America, even for that matter Australia, they realize that they need to start looking for alternatives, right? We can't 100% replace China, but we can at least have an alternative where we have a solid foundation. Our government probably sensed that, started negotiating, because trade deals take years and not months or days to get executed, because they have to go line by line, item by item, and those negotiations go on for a very, very long time. Starting 21-22, we initiated discussions with major developed nations around the world, and we can see the fruits. The deal with European Union, though not signed, it is very widely expected that it might get executed next week or after the Republic Day on 26th of January, right? Now, if we look at European Union, it's a $18 trillion economy, 5 trillion in total trade, whereas India's trade is only 140 billion. So that's roughly 2%. Now that 2% can easily go to 5% because, like I said, we are very close to executing a trade deal, and Europe is looking for a reliable partner away from China and now probably away from the United States as well, right? Similarly, UK, $3 trillion economy, $2.3 trillion trade. India's trade with UK is only 40 billion. Australia, $1.6 billion economy, 1.2 trillion global trade. India's trade is only 32 billion, right? So Switzerland, Norway, Iceland, Liechtenstein. So these are 4 European nations where we have already executed an agreement. UAE, Oman. So Oman is something which is very unique. So we are not leaving even a small country with a nominal GDP of 90 billion. We are not even leaving that, right? So every opportunity that we get to execute a trade deal, we have been trying to get that. This is a big positive, and it will help our country over the next few years. Yeah. So part 3, we are going to focus on those domestic factors which are very positive for the short term, medium term, as well as the long term. These are all the things that have happened in India, especially in the last 1 year, and specifically in the last three months, that is the month of October, November, and December. 2025 started with a major tax cut by the government in the budget. It was followed in the month of September by a GST rate cut. Along with the government cutting taxes, we have had the RBI reduce interest rates. So from 6.5% to 5.25%, that is the repo rate has been cut by the RBI. They have also infused a lot of liquidity into the system. The sole purpose is to bring down the borrowing costs and consumers as well as companies to borrow more and expand capacities, consume goods, etc., etc. Fortunately, we have also had a very good monsoon in the year 2024 as well as in the year 2025. We can see that from the reservoir levels. We can see that from the tractor sales that listed companies have been reporting. We also got a sovereign rating upgrade from Standards and Poor after a span of 18 years. This was something that India always wanted, and we got it after 18 years. Inflation has been low, and crude prices, which had spiked to around $120 per barrel, have come down to about $60, and they are usually trading in the range of 60 to 70. Also, a long-term structural reform, that is notification of the labor laws, was done in the month of December, and it is going to have a positive impact over the long term. Yes, short-term impact is there, but long-term, this is going to work out fine, both for corporations, enterprises, and the employees. Apart from these structural reforms that have happened in the year 2025, we see a lot of push from the government in some of these industries that we have specifically stated here, starting with semiconductors. We have taken baby steps, and we hope 10 years later we'll see the fruits, where we'll be able to manufacture some of the low-end chips at least, and then another 10 years later, maybe, who knows, right? We might have a place with the high-end chip manufacturing as well. There's a lot of focus in defense, making sure that weapons used by the Indian armed forces are produced in India, right? To reduce the volatility of all the things that are happening around the world. Shipbuilding has been given a push. Again, it's a long-term story that will play out. Private company participation in nuclear energy, insurance for all, manufacturing and PLI has been playing out very well, right? The government has been pushing manufacturing through the production-linked incentive schemes, and there was also the announcement of a deep sea exploration by the Prime Minister. I think in the Independence Day speech, India has 26 sedimentary basins. Only 14% of that, as of today, has been explored. So there's still a lot of exploration that we need to do. And now the focus has shifted. There's drilling happening in Andaman, there's drilling happening in Kerala, Konkan, and multiple locations, right? So these are the other industries where the government has specifically given that push. Now, here we would like to talk about some more structural reforms that have happened over the last decade or so. It's not something that has happened in the year 2025. It goes beyond that. We all know about the digital infrastructure, the digital highway that we have created. We've got very cheap internet, and the combination of Jan Dhan, Aadhaar card, and UPI, right, has really revolutionized this country, and we can see the impact, right? Today, everyone is able to get whatever information they want the government is able to communicate, we are able to communicate with each other through the digital infrastructure that we have created. Here we are specifically talking about something called as global capability center. It's a very popular theme today that everyone is talking about. What global capability centers mean is that these are not the typical outsourcing offices, but these are some core business functions of global corporations that are set up in India. It could be finance, it could be IT, it could be research, and multiple such core business functions of major corporations. They are transferring it to a country like India. That is what is called as global capability centers. So as of today, we already have 1700 GCCs, and we have and all of them put together have a combined revenue in FY24 of $64 billion. They employ 19 lakh people. However, this specific industry or sector is expected to grow to 105 billion by 2030. We are likely to have 2400 GCCs at that point in time, employing 28 lakh people or professionals, right? That's the estimate. And what we see is deals like this. So if you see this, American banking giant JP Morgan, so this is the premium bank or the premier bank in the United States. They're the largest there, and in fact they're right at the top of the United States, right? The banking sector of the United States is expected, or they have already done the planning to set up Asia's largest GCC in India, and it will occupy 2 million square feet. Fortunately, it's coming close to Pune, that's in Mumbai. It's going to be set up in Powai, and they're going to employ 30,000 people, right? Google's building the largest campus outside United States in Hyderabad, right? So this is coming out in Gachibowli. It's a 3 million square feet office that they are setting up in the financial district of Hyderabad city. Last month, we saw Microsoft deciding to invest $17 billion to drive AI diffusion and population scale services, again employing more than 22,000 people, right? And when we talk about digital India, we have to talk about UPI payments, right? So we have created the digital infrastructure. Now we are creating the digital stack, as they call it, and we are able to give mass scale services to our entire population, right? Imagine 1.45 billion people able to communicate with each other and do transactions and do business, right? Wherever they are. You don't have to be in a large city, or you can be in your village and still be connected to the world, right? So what was very surprising, we got this update from the Press Trust of India, was that in the month of June of 2025, 50% of the transactions of the world, 50% of the digital payments of the world were done in India. And UPI today handles 640 million transactions. So you can imagine the scale at which we have, or you can imagine the scale that we have achieved. Now, along with digital infrastructure, the government, especially after COVID, has been focused on physical infrastructure as well. The objective is to facilitate manufacturing as well as services sector to grow, right? And as you can see, this is from the budget 2025 document. This is a formal document from the government of India. We used to have a 4.5 lakh crore or 4.5 trillion rupees. That was the capital budget, right? That was the budget that we used to have for building ports, roads, airports, etc., etc. So that 4.5 billion trillion or 4,50,000 crores went to 5,20,000 crores by the time we got into COVID, right? That's 2020. But since then, you can see that this chart has just gone up, right? From 5.2, we have gone to 15.5. So there's a 3x jump in the amount of money that the government of India is spending on building capital assets, right? And not just the government, the central government that is spending money, but they are also funding the state governments. So you can see this number going from 1.7 to 4.3. This is a big positive. Now, what this is enabling us to do is, as a result of this physical infrastructure as well as the digital infrastructure that we have created, we have all heard this story where Apple has set up, Apple is assembling iPhones in India, and they're setting record. It's going at a record pace, right? There was a small, but it's again a baby step. We saw and we came to know So what all of this digital as well as physical infrastructure investment that our country has done in the last 10 years, 5 years is leading to is we all know Apple is now manufacturing their iPhone in India. Samsung has now started to produce their laptops in our country. Initially look like small steps or inconsequential events, but they have huge implications over the medium term and the long term. I think the electronic manufacturing story is one of the best showcases of how India can actually capture or play an important role in in manufacturing multiple other things, right? Another focus area for the government has been setting up defense as well as high-end manufacturing. In October of 2025, we had Airbus and Tata Advanced Systems starting to make H-125 helicopters in the state of Karnataka. The month of November, we saw Safran, which is a French company. They make civilian and military engines, and we all know the importance of manufacturing military engines in our country, right? So they expanded their facility, or they inaugurated their facility, and a new facility, and in fact, they intend to triple their revenue from today till 2030. Right? This was actually a very a major event, and the Prime Minister himself, though online, inaugurated this facility, right? And the entire Telangana government was also there. When I saw a 5-minute clip of that event, there was no politics. It was all development, right? And all what we can do for our country. So that's very positive. Another thing that played out, this played out actually in the quarter 2 and the quarter 3, was there was a lot of interest from global investors into Indian banking and financial institutions, and primarily these are all mid-sized or small-sized banking and financial institutions, right? So we could see that RBL got an investment from Emirates NBD to the tune of 26,000 crore. It was also a major change in direction from the RBI, which allowed a foreign company or a foreign institution to own a large bank in India, right? We also had Sumitomo Mitsui Banking Corporation picking up a 24% stake for 15,000 crore in Yes Bank. IDFC got Warburg Pincus and Abu Dhabi Investment Authority 10,000 crores. Samman Capital International Holding, again a Abu Dhabi company or a UAE company, 8,800 crores. Federal Bank, Blackstone ended up investing in this bank. I think they took about 10% stake, 6,000 crores. And there are multiple small deals that we have not put in here. Just these transactions all put together, 67,000 crores, global investors putting money into Indian banking institutions, and they all happened. Everyone was caught by surprise that why are so many transactions happening in the banking and financial services space. So this tells us something, right? These are all marquee investors of the world investing into Indian banks and financial institutions. Another example that we want to talk here is about two firms, specifically Blackstone and Brookfield. So Blackstone is a US based company. We all know what is happening. We just initiated this entire webinar with what is happening between India and US. But this is what Blackstone, which is the biggest alternative investment fund. So what alternative investment funds invest in are basically energy assets. They'll buy real estate. They'll buy data centers. So everything that is not in the stock market or maybe even in the bond market, right? So Blackstone today manages about $1.2 trillion, right? To put that in context, India's economy is $4 trillion. So Blackstone manages $1.2 trillion. Here, their CEO, right, is in fact saying that in a way, we are ambassadors for India to the developed world, right? So they want to become the ambassadors for India. So you can see how confident they are. In fact, Blackstone did a deal with a real estate company in Pune. We're keenly watching that. It was very interesting for such a large company to invest to do that investment, right? Similarly, Brookfield, which already has a large presence in India, wants to triple their assets, right, and take it to $100 billion. Again, Brookfield manages 1 trillion. At 100 billion after 5 years, India is going to account for maybe 7 to 8% of all the assets that they are managing. So you can see how global corporations are looking at India, those transactions with the banking institutions, and how these alternative investment funds are investing, right? So one positive that we have seen with respect to India over the last decade or so, or maybe longer, is that corporate profit growth has been steady, right? And in fact, you can see from this chart that it has been accelerated. 2015, 16, 17, 18, not a great time. We had a lot of demonetization, GST implementation, a lot of challenges were there. India was coming out of, we had a lot of non-performing assets. But starting 2019, you could see that for some, in some of the years, like 2019, 24%. Then again, it slowed down during COVID. Then after COVID, we had some very good years. Today, yes, one of the biggest challenges that India has is that corporate profitability, the growth is not there, or the growth is not as good as what is expected by the markets. It's somewhere in the low double digit, that is maybe 10 to 12%. This needs to go higher, right? That's where all these reforms and all these steps that the government is trying to take, I think this is what they want to achieve, right? But our average growth is much better than what we have seen in China, what we have seen in Taiwan, and what we have seen in Korea, right? So that's one big positive for the Indian market. So these were all the domestic factors. Some happened in the year 2025, some are more structural, and we just thought we put them up as they are, right? 4 is about market correction. Right now, this was one slide which we found very interesting, and we updated the data to about 22nd of January 2026. That is very recent. Whenever you look at the index, right, we see that the index, despite all of this volatility, is down about 5%, 5 to 7% on the at an index level, right, from its 52-week high. Whatever the 52-week high was, from that level, the index today, that is Nifty 50 or the Nifty 500. Nifty 500 is the much more broader sort of a market, which includes large caps, mid caps, as well as small caps. It's down by about 5%, right? However, when you look at the median fall, and I'll explain what median fall is, that median fall is at 21.67%. So this was one thing that we wanted to show. At an index level, we don't see that big a fall, but at a stock level or at a broader index level, that fall is much higher. So what median fall means is and the calculation is done in such a way that for all the 500 companies, you calculate what was the high price, that is the 52-week high, how far down they are from the 52-week high. You sort them out in the order of the worst performing to the best performing, or the relative best performing, right? So the worst performing is at the top, the best performing, a company that has probably shown positive returns, is at the bottom, right? And then you pick the average of the 250th and the 251st company, and that average is 21.67%. So you can see that the correction, right? So index has been held steady because of some index heavy stocks performing, but apart from that index, there is a material correction that we see, and this in fact opens up an opportunity, right? There's also this data where number of stocks which are hitting 52-week low has gone to about 560. So you can see this number last time we saw was in the month of March of 25, where there was a material about a 17-18% correction at an index level, right? And after that, we have seen another spike right now. Before we come to the part 5 or the conclusion, we would just like to say that yes, there are positives, there are challenges, there are some negatives as well, but we have to look beyond the short term, the immediate term, and think what can happen, the potential of our country over the medium term and the long term, right? In conclusion, it is always better to follow asset allocation. Asset allocation means giving material exposure to gold, international equity, India equity, debt, and some income generating real estate. As you can see, different assets will perform in different years, and if you follow this, it's very likely that you'll have a smooth financial investment journey. This is some content that we have already uploaded on LinkedIn as well as on our WhatsApp channel, and you can see that there is always some or the other reason to sell. We can see some panic in first time investors, those who started after COVID, those who started in the year 2023, about what is likely to happen. All we have to say is that these kind of events have happened in the past. In fact, this, in our opinion, in our humble opinion, is sort of a minor volatile situation that we see. It will get resolved. There could be bigger problems in the future. There will be issues, But as you can see, this is the chart of Sensex from 1979, that is at the start, from which we started to calculate Sensex to where it is at the end of 2024. We have not added 2025 here. So there are multiple occasions, right? There could be the 2008 financial crisis, COVID. These were big events. Then we had the Ukraine-Russia war in 22. We still remember that things were very volatile at that point in time. But those who continued on the journey ended up doing very well. Also, what happens is that volatile times allow us. So when markets are growing, the NAV continues to grow. That increases the value of your investment. And when the markets are not growing, your units grow, right? So this is a very simple calculation, or a way representation of what we can do in this investment journey. Also, what is important is to make sure that the quality of your investment, the quality of your portfolio continues to improve. Now, when we talk about quality, it just doesn't mean investing in quality stocks or quality assets. What is very important, or what is equally, if not more important, is to pay the right price. That is, buying all these assets, it could be stocks, it could be real estate, at a reasonable valuation. Now, what is reasonable is subjective. Everyone has their own assessment and the way in which they calculate what is a reasonable price, but make sure you pay attention to this fact and not just invest in quality, right? So investing in quality has to go along with buying these assets at a reasonable price. To conclude, follow asset allocation, be patient, follow discipline, and a systematic process of investing in quality assets at a reasonable price. Thank you.